What is going on, everybody, and welcome back to this week's video on the Overture One channel here. And we are going to be talking about a part two actually of the how to trade during a recession. We feel like this is a very important topic to be going over because it's very current and relevant to what's going on right now. But before we get into everything, we just want to make an announcement. We just dropped our technical analysis they don't want you to know about course. You can actually check it out in the description box down below. It's going to be the first thing that you see. Within this, we actually talk about specific strategies that we personally use and how we're maneuvering the markets right now.
So what I'm going to be talking about today is investing. As opposed to last video, we were talking about trading in a recession, and that's like very short term. Investing is long term. It could be a year, 5 years, 10 years, 50 years, whatever. But when it comes to that, guys, I'm going to give you one practical step right now in investing. I already told you it's long term, right? So you have to develop the psychology of long term. So you know that you're going to be in a position for a while or whenever your profit gets hit. Or your stop gets hit. And when that happens, I want you guys to refer to this one action step that I'm going to tell you guys. So all you're really going to do, guys, is you have to determine three things in the market. Is your entry, where you're going to buy, where you're going to sell. Majority of the time in investing, it's buying. And where you're going to take profit. So you hit 100% return, great, awesome. Are you going to exit there, or are you waiting for 200% return or 300% return, whatever the case is? And I'm going to touch back on that point in a minute. And the third thing is where you're going to get out if you are losing too much money. So you already have to determine what your risk is. Number one, in trading, that's the name of the game. Most people are not able to see results because they're not able to accept that. So I'm only able to accept a 25% drawdown because I'm going for 100%. I'm going for 100% return, right? And in crypto, to be honest, guys, you already know that's kind of attainable. That's pretty simple. Now people get the connotation in crypto and everything so far that if it's 100% return, it's kind of garbage. Which bro, 100% return is amazing, bro. Right. Still, that's very much amazing. Just because you didn't make 40,000% return, you didn't get rich on one trade. Oh well, yeah, go try to put that in a 401k and see how long it takes 100% that while all these brokerages and everything are taking your fees and everything so far. And then the second thing that I really want to talk about is think about the masses and do the opposite. Talk is cheap. You can listen to us, you can listen to other channels and everything so far, but ultimately at the end of the day is do these people have the results that you want? Everybody will tell you the recession's here. Awesome, great. We do believe it is here, and it's only more to come, right? But all these people, some coworkers, I remember I was in a work environment and they're like, man, bro, I literally had this guy. He's like, bro, this guy literally was on government assistance while at work, and he didn't want to sell. It was a sales job, ultimately. He didn't even want to sell so he could qualify for government assistance. And then I overheard he was trying to give this new guy at work basically info about crypto. And he would basically get into positions in Robinhood with crypto and get out when he profited 50 cents. So and he was bro, you just gotta buy there because oh man, anytime there was a bad day in the market, quote unquote bad or negative, he would sell. Every time some news things would happen, he would sell. I tell you guys this because I witnessed this, and they would come up to me because they know I trade. And I'm I've been in this for 3 years. I'm still teachable and coachable, but I'm not listening to somebody that doesn't have the results that I want, right? But I already know that they don't have nothing that I want. So I'm not gonna listen to you. It's you try to have a rebuttal with everything so far. So it's why am I listening to you? And the reason I'm telling you this story is bro, what are you qualified to do? If I saw your accounts and they're popping, but I'm brother, I know everything about you right now, and I don't want one single thing to do with you. This is not in a bad way, but you have to realize this and be bro, I'm not becoming like you. Bro, you're 20 times better off going on YouTube and going to our channel and following what we say as opposed to what somebody else just literally trying to live off the government says. And think about it, if you're trying to live off the government and you're trying to make money, does it really make sense there? Because once you make a certain amount of money, you don't qualify for government assistance. That doesn't even make sense, guys. So that story, just keep it in mind. Any coworkers out there, bro, I need to, sorry, but it's I need to see your account or anything so far that. bro, like if you're still here, like you clearly don't have the results that you want. You want to follow results like what Jared is saying. Like he doesn't have to work a job and everything so far, and his main income is trading. So ultimately, like, who are you gonna listen to? So yeah, with that being said, guys, like also another step that you can do is literally purchasing our course. Is we have the VIP package with the trading psychology, with the forex basics and the technicals course, so you can learn that and you can be a better day trader and a better investor. And if you just want to be a better investor, ultimately I still recommend you get those three, because you need all those three combinations to actually produce the results that you want.
100%. And one of the things I want to get into, just piggybacking off of what you said, you're talking about logical exits in the market, and or defining an exit rather in the market. And the point that I want to make is that you need to make sure that they're actually logical, right? So like you said, 40,000% or whatever, it's like a lot of negative things happened as a result of the massive bull run that happened last year. There was a lot of great things from a financial standpoint, but in terms of a mindset standpoint, people have an unrealistic expectation. And you need to have a logical expectation of when to get out, and you also need to follow that exit once it's time to exit. And this is super funny. Like a movie that I watched last night, it was about this dude who, it was like a gambling movie, right? So he's playing blackjack or whatever, right? And he has an exit plan, and his exit plan is to make $500,000. And he's like, okay, once I make $500,000, I'm leaving Vegas. I'm going to such and such place for 5 years. I'm sailing. I'm doing all this type of stuff. He had his exit plan to a T. He went to the casino with 25 grand. He made his $500,000. He went to cash out and take the money, broke his rules, went back to the table, lost all the money. And it's like, that's what happens when you don't follow your rules, right? And it was like such a perfect example of like, unfortunately, a lot of people investing go through this, because when it comes time to close your position, people don't want to get out because they see the money growing up, and instead of realizing an actual gain, now they have nothing. So that's just like a first point that I wanted to make. And to jump into what you were talking about of like kind of like a contrarian approach, I want to unpack that a bit and really talk about like something that I personally believe is that like you can't really follow the trend too much. Like a lot of people made good money in certain markets last year from following the trend, but last year was a pretty big outlier, right? Because if you even look at the residual effects of that, most of the people who made that money, they don't have that money right now. Most of those people got greedy. They held for unlogical targets, like a couple $100,000 Bitcoin, for example, which was not a realistic target, in my opinion. And I've been saying that for forever. But they're taking something and they're taking their bias and they're creating an outcome that probably won't happen, and they're selling themselves on it, right? So it's like you get this unrealistic hope of like, man, like, and then the worst part is that you have all these people who come together and rally behind this idea, and now it becomes a trend.
Like cheerleaders.
Correct. And it's like one of the biggest things that I noticed was that it was a trend to be buying crypto, specifically Bitcoin, because everybody started calling it a store of value, right? That became the narrative. Oh, it's a store of value. What does that even mean, right? A store of value means that it's going to hold its value, right? And it's 80% less, 70% less than what it was. So it's like all of these like common narratives that people just kind of build. You got to remember this. Most of the things that people think are facts are actually just opinions that everybody kind of agrees on, right? So it's like everyone's calling this certain thing a fact. Oh, just think about 10 years. Oh, just focus on the long run, right? So buy at 60K, buy stocks at all-time highs, focus on the long term. And then everybody thinks that that's a fact and that's how you're supposed to invest. But really what it is it's just a group of opinions that got big enough to the point where people started believing it, and that's what the narrative is, which is a pretty, like, to me it sounds crazy, right? And it's like, I really want you guys to come up with your own unbiased and personal rules that you follow and beliefs that you believe in about the market. And just to break that down a little bit further, what I really mean by that is like, have your own opinion and stick to your backbone, you know? For example, I know people who were on our side of the narrative who were very public on social media about this bull run is not going to last forever. And I remember seeing like big influencers on social media calling out people that I knew for having the same approach that we do. And it's like, that's a part of this like herd focus where it's like nobody wants to be wrong and everybody wants to be on the right side. And it's like when you have the unpopular opinion about something, sometimes it gets difficult to stick to your word, right? And stand by your belief. And naturally as humans, the reason why I'm nailing this point home, people have a tendency to want to fit in. People will do what it takes to be a part of the herd because being a part of the herd and a part of the tribe was like a survival mechanism for people. And you have to understand that, and you have to not fall into that when it comes to the decisions that you make with your money, because we're seeing the aftermath effect of what it really looks like for everybody to come together and believe in the wrong narrative, right? The last thing that I want to jump into on this point is a little bit more of like a technical aspect. This is something that we go super in depth in our technicals course that Rob was just talking about, and it's where you should actually be looking into getting in investments, right? One of the concepts that we talk about is where is price at currently, and we look at a very logical flow of how price went, and we look for discounted entries to get in. And if you looked at the price swing that something for, I keep using Bitcoin as an example because it's very relevant. This is for anything. You can use stocks, crypto, whatever, right? The price swing that Bitcoin made was very extreme. It went from like a couple grand, you could say 3-4 grand, all the way up to almost 70 grand. The middle of that price point is about 35, 37 grand, between 3 grand and almost 70. That's the halfway point. To me, anything above that is not a discount buy, right? So you got all these people who are thinking, oh man, crypto dropped from 70 grand to 50 grand, crypto's on sale. Well, that's subjective. That's your opinion. And when you have a lot of big people in the world, like influencers on social media, saying that's a discount, they're misleading and they're construing their own narrative, and now it becomes this fact, right? But if you look at the actual logic on the chart, and I know I'm going kind of deep in this video, but if you look at the actual logic on the chart, it's not telling you that's the case, right? So that's one of the neat little tricks that we actually speak on that we use as day traders, but we also apply in our investing career, right? That has helped us be on the right side of a lot of these big price swings. And I know that that's a lot to unpack. Maybe you guys got to go back and re-watch this stuff, but we really wanted to deliver a lot of value and hit a lot of points home when it comes to how to make actual logical investing decisions, as well as giving you the resources that we put together, like our technicals course, like our psychology course, where we talk about the importance of emotional intelligence, having a trading plan, all these things that you need to become a successful investor, especially in times like this where, you know, you are going to need a skill set that can survive a recession. And day trading and investing can be that skill set for you if you know how to actually execute on it. So with that being said, we hope that you guys got a lot of value from this video, and we will see you guys in next week's video.